I'm Nick Hodge, along with my partner and editor of Junior Resource Monthly, Gerardo Del Real. On behalf of Digest Publishing, we'd like to welcome you to $3,000 gold. The junior mining boom begins. Hello, Gerardo. How are you?
I am giddy with enthusiasm per usual, Mr. Hodge. Thank you so much. And thank you to everybody that's tuning in. Several of you have already had some really kind words in the chat. I appreciate it. And don't take for granted the time that you all are making to be with us today. Thank you for having me, Nick.
Look, it's no secret that gold and gold stocks can create and preserve fortunes, but doing it for yourself can be elusive for a number of reasons. We're at that perfect moment in history that can change that. And that's why we're having this webinar today. We'll cover why we're at the perfect moment in history for you to make a fortune from junior gold mining stocks. We'll also cover 3 of Gerardo's top current recommendations and offer you a free report that goes into more detail on them. There have been 2 epic gold booms in modern history, in the late 1970s and early 80s, and then again in the early 2000s to the peak, the most recent peak in 2010, 2011 for gold. There's been some smaller booms inside there. Some of you may recall 2016 and 2020, but none like the big 2 that I just mentioned. And we're headed into a big third one right now for a number of reasons. And I'm going to share some macro details with you right now, and then we'll get into some micro details with Gerardo. So here's the gold chart. It's the highest gold has ever been in the 5,000 years that humans have mined gold. We are over $3,000. We are firmly in a gold bull market. And there's catalysts and drivers ahead that should see higher gold prices. And more importantly for this discussion, much higher gold stock and junior gold stock prices. How high? Well, here's an interesting chart. How many S&Ps does it take to buy an ounce of gold? You'll see that currently it only takes 0.6 of an S&P, with it trading around 5,000 points or so to buy 1 ounce of gold, which is, as I just said, over $3,000. If you look back to those recent peaks, 2011, it took over 1 S&P to buy an ounce of gold. And that would, of course, indicate that gold would go over $5,000 at today's prices. And then look back to that boom in the late 70s and early 80s, and you'll see that it took well over 6 S&Ps to buy an ounce of gold. That would necessitate something like $18,000 gold in today's prices. So you can see that chart is still down to the right, a lot of upward empty white space for the gold price to move. This is the SPY, the SPY, the ETF for the S&P 500. How many of those does it take to buy 1 share of GDXJ, which of course is the junior mining ETF? Well, it currently takes 0.1, just 0.1 shares of that SPY ETF to buy 1 share of GDXJ. But you'll note on the left side of that chart, in the last gold boom, when it peaked in 2011, that it took over 1.4 shares of SPY to buy 1 share of GDXJ. And so by this chart, the entire complex, the entire GDXJ junior gold mining complex has 10x room to run higher. Why can gold stocks do that, and gold? It's because the stock market is still historically overvalued. Look back to 1980 on that chart, where the stock market was when gold and gold stocks were running in 1979 and 1980, with a Case-Shiller PE down around 10. We're more than 3 times higher than that now. It's still in bubble territory for valuations of broad-based shares of stock. And I would expect any rotation, further rotation, we're currently down some 5 to 7% for the year. Any further rotation of capital out of broad-based equities into the gold complex is going to send it much, much higher. There's still not a lot of money in gold. You can see here, this is a US global chart. Implied investor allocation to gold is still relatively low, something like 2% of the retail investor's portfolio. By this measure, to get to 8%, where we were last time we had a historic gold boom, implies a 4 to 5x of the entire gold complex. And here's something that many of us know, and another reason that we're here. Gold has surged and is in a bull market. That's the gold line there. But the stocks still have some catching up to do. So you'll note that to get back to where they were in 2011, gold stocks I'm talking about, they need to nearly double. And to catch up to where the gold price is, they need to more than double. And this is the final chart I think I have here. Where are we? Well, this is why we're having it. You can see the little wick on the candle there. This is a cup and handle technical chart. We have now broken out on the GDXJ above $61 per share. Near-term target would be above 80 some dollars. And you can see where it was in 2011, up around $180. Implying a tripling to get back to where we were in the last gold boom. So, Gerardo, we are clearly in a gold bull market. What do you see as continuing to drive gold and gold stocks from here?
My capitalist heart gets giddy, Nick, because and you did a brilliant job. You showed a chart from the 70s. And much like the 70s, when we were taking off the gold standard, what led to record high gold prices and what led to inflation, stagflation, a lot of the things that we're seeing today was government incompetence, right? And so I recently listened to an interview with Ray Dalio. And I have to tell you a funny story, Nick, because I have a childish sense of humor. We have to give a very big thank you to an exotic dancer back in the 80s. Were it not for an exotic dancer, Mr. Ray Dalio may never have come to us as the Ray Dalio that we know today. And so he was a scrappy kid from Queens working at a brokerage, and he thought it would be a good idea to hire an exotic dancer for his boss's birthday. His boss didn't find that amusing and fired him. And so this is what forced Ray Dalio to start what is now one of the world's biggest funds. So back to the 70s and back to Ray Dalio's interview. He warned of a global monetary reset, a Bretton Woods style change in monetary and fiscal policy. And the important thing to really, really grab onto is this isn't voluntary. Unlike the tariffs, unlike some of the other things that are going on with government policy, the 100 trillion plus of unfunded liabilities is not something that we are volunteering. We have volunteered to put ourselves in that situation, but there is no quick fix or a fix for that. And so when we have budget deficits that we're not cutting, we're adding to, when we have relationships geopolitically that are becoming more and more fractured, when we have a government who can't pass an audit, can't balance a budget, it doesn't make me smile that societally here in the US and globally, we're headed for some volatile times. But again, back to my capitalist heart, it does make me giddy with enthusiasm because I see the opportunity. And look, I literally am betting millions of dollars of my personal money that this is going to be an absolutely historic run. So for those of you that are watching and you're looking at the chart and you're saying, well, Gerardo, gold's at all-time highs or near all-time highs already. The fun is just getting started in the equities, and especially in the sandbox that I play in exclusively, which is the junior resource stocks. That is my bread and butter, and it's also going to be where I think we're going to make an absolute killing for many, many years.
Let's talk about your bread and butter, those junior resource stocks. I mentioned there's been some mini booms in the past sort of 10 or 15 years as we've been involved in the space. I mentioned 2016 and 2020. We've done well over that course of time in gold stocks, despite what's been a relatively depressed gold and silver price. So can you, for the audience, tell us about some of the wins of the companies you've been involved in over that time and the gains that they've returned, just to sort of set the table on the kind of gains that can be made in a gold bear market and then how much the upside could be in a bull market.
No, I think it's a great question. Look, and everybody that's watching is likely familiar with one of our biggest wins, you and I collectively, which is, a lithium stock, Patriot Battery Metals, which still has a long way to go. We helped, that company get going at 16 cents. And eventually it hit a high of $17, and now it's pulled back below $3 with the softening of the lithium price. But that wasn't a one-off. One of the things that I'm most proud of is that we've made good money for ourselves and our subscribers, friends, and families during bear markets, during really, really tough bear resource markets. Great Bear Resources comes to mind. That's a company that, we did extremely well in, quadruple digit gains. We got in really early. It was eventually taken out for some $26 a share, if I'm not mistaken. But, we were onto that company when it was trading, if not pennies, like low dollars. And that was, again, during a time where the market wasn't favorable. The gold price wasn't really providing that macro drive that we have right now. The setting that we have right now, Nick, is absolutely the best I've seen in my 16-year career. And unlike a lot of people, I'm a contrarian by nature. I love the fact that so many of the junior resource equities have yet to really, really perform. And I also love the fact that we're having this webinar here. A lot of the companies, specifically the high risk, high reward ones that I dabble in, don't tend to have that major catalyst, which tends to be creating value via the drill bit.
Yeah, catalysts abound, and you're being a little bit modest. I know there's some other big winners there that you've been a part of in recent years, and maybe I'll just call a couple of them out. A couple that we've toured together. The old Midas Gold, which is now the Perpetua Resources, was a $3 or $4 stock in early 2024 and ended up getting permitted there towards the end of the year or the beginning of this year and ran to a $17 share price. Will likely be in the portfolio of a major at some point. And then I should also point out, we did marketing and promotions around Perpetua, imploring, encouraging people to buy it at $3, $4, $5, $6 a share ahead of its run to double-digit share price. Same with a company like Hannon Metals, which you and I toured last fall and have been, recommending since 10, 15, 20 cents a share, now trading at $1.40 a share, right? Has more than 10x. So, and that again was not at $3,000 gold when we were doing that sort of stuff. So, and the other thing I'd point out is that not only do we have $3,000 gold, but other commodity inputs are soft. Like oil is relatively cheap, so we should be getting some darn good earnings reports here soon. And I guess that's a pretty good transition because input costs are one thing for actual miners, but for these junior miners who might not be producing yet, what criteria are you keeping in mind when you're evaluating these companies? And if you don't mind, maybe some red flags to look out for.
Yeah, no, listen, you and I both came up in the business with a lot of guidance and advice from a mentor that's been very generous with his time and subsequently has really helped us develop a network that I think is I don't want to say unmatched, but it's definitely one of the better networks in the business, right? I pride myself as a simple guy with simple thoughts and ideas. And it's really nice when I see, let's take a Hannon Metals, which is, one of my top picks. I'll give you that one for free today, folks. That company there, when we went into the jungle and we spent, 19-hour days getting in and out and doing a 10, 11-hour hike and on cliffs and through creeks. And it's important because I knew what I was looking for. And the reason I knew what I was looking for was I was able to lean on some of the geologist contacts that we have. I was able to get expert opinions on the types of systems that we were looking at. And that really informs the checklist that I have for due diligence. So back to the mentor that you and I and the advisor that you and I share, Nick, we came up being taught that the very first thing you want to look at is share structure. And so what I mean by that is, I'll give you an example. Let's say somebody pitches me a deal and they say, hey, Gerardo, we have this company. It's a small company. We would like for you to help us get the word out. We would love for you to invest in this company. Can you take a look at it? One of the first things I'm looking at is how many shares are outstanding. Who owns those shares? At what price were those founder shares gifted or vended in, right? If you have 10 million shares outstanding, are 7 million of those gifted to yourself or given to yourself and your buddies at a penny? And if they are Are those shares locked up? And if they are locked up, are those shares reporting? So when we talk share structure, it's critical to know who owns the shares, at what price they own those shares. Are there warrants? Are there other things that may provide an overhang on the stock price? What does that look like? And then then we go down the list. So share structure is the very first thing that I look at before asset, before management. Now, the very next thing is the management is critical. You and I know, because one of the picks that I'll be sharing for those of you that come on board today. I've been wanting to share this idea. I'm so excited for this pick, Nick, but I've been wanting to share this idea for months on end now. And the one hiccup, if we'd like to call it that we had, is that we weren't familiar with the management team, and we really wanted to make sure that we were able to have someone on the board that would provide some oversight and provide assurances on dotting the I's and crossing the T's. And no disrespect to the existing management team, just simply we haven't had the pleasure of working together. And it was important for me that if I'm bringing this idea to myself and to friends and to family and subscribers, that there's the kind of oversight that we like to have. Because listen, it's a high risk, high reward business. Everybody knows it. I've done very well with it. But you have to know how to navigate those risks, how to mitigate those risks, and having somebody with a history and experience of checks and balances and systems in place and processes in place was important to us. And finally, at the end, we were able to get that outcome. So management is absolutely critical. And then lastly, as oddly as it sounds, the last thing I look at is going to be the asset. And if we can check the box on the share structure and make that acceptable, and we can check the box on the management side, now I want to dig into the asset, right? And when I mean the asset, I want to know the commodity type or types. One of the picks today happens to have two high grade plays, kicks at the can per se, within the same land package. I absolutely love it. But what commodity is in play? Are there other commodities in play? What is the potential scale? Scale is a big one for me. It was a big one with Patriot because I knew that they owned 50 some kilometers at the time of potential fertile ground within this greenstone belt. And I knew if they made one discovery, the company likely was going to be on to multiple discoveries, which is exactly how that's played out. And I knew that because, again, our network was able to inform me and explain to me the geology of the region and what that looked like. So scale is important to me. Somebody that needs no introduction, Mr. Rick Rule has a great line saying, small land packages cause the same problems as big land packages, and small mines often have, the same or more problems than a big mine. So go big or go home. I like the potential for scale. If it's going to be a small land package, I want the potential for multi-million ounce gold deposits or hundreds of millions of tons of, whatever commodity we're targeting. But scale is a big one for me. I want to make sure that if I'm risking my capital, my subscribers' capital, my friends, my family's capital, that if we win, because it is high risk, high reward, that win is proportionate to the risk that we took and that we make it count, right?
Absolutely. You mentioned the network multiple times there. Yeah, we're standing on the shoulders of giants. While you were talking, I held up my what would have been a Rolodex. Now it's just a stack of hundreds and hundreds of business cards, right? Probably all of which are in my phone. But yeah, being able to reach out to someone like a Mr. Rule or another high net worth investor who has their own geologist on payroll, for example, that you can get an unbiased report about a property. Those are the types of things you need to get an advantage in this space where information and companies and assets can be opaque and you literally can't see underground. So the network is super important. Before we get into the picks and the investment part of it, I got to ask you about silver, because we've talked mostly about gold here, but silver plays a big role in the precious metals complex, especially in a robust gold bull market once it does spill over to the silver metal there. So talk to me about silver for a little bit.
Gold's bipolar side piece, right? I mean, silver, what's not to love? What could possibly go wrong? No, listen, jokes aside, I joke about silver and the volatility with it because historically, silver tends to overshoot both to the downside when it's trading like an industrial metal like it has for several years, and to the upside like it did when it overshot to 48, 49, $50 for its record high. When I see silver being stable, a stable genius, if you like, at $32 or $33, again, it makes my capitalist heart giddy because I know what's coming. I look at the amount of capital that's rotating out of the tech sector, where a monkey could have made money for the last 10 years, given the financial and monetary conditions that were laid in place with the Fed easing and money printing and all the crazy fraud that's going on, right? Anybody could have made money in the tech sector over the last decade or so. That's why 401ks were so plush. And that's why we're getting that rotation out of that tech sector now. And that smart capital, the Ray Dalios of the world, are starting to look for other places. It's why you have the contraction in the major indices. It's why the bond market's behaving the way it's behaving. Capital is looking for a safe haven, and it's found that in gold and will continue to find that in gold, but it's also going to find it in silver. And so the silver market is a smallish one. It's not opaque, but it's definitely a small, volatile sector that if you get a silver pick, and one of them today is a past producing silver district that, again, will have a rig turning within the next few days. If you can find an early stage, well-structured, and I got it, company with a land package that is a past producer, and you can see where the silver is, and you can see what was left behind, and you trust the management team, and I do in this case, you can do extremely well. I'm not talking a double or a triple. You can make 10-fold, 50-fold, 100-fold returns with these types of companies in the right silver market. So I say all that to say that silver's got a lot of catching up to do to get to record high prices like the gold price, where the gold price is now. And I think, $45, $50 silver is absolutely in the cards within the next 12 months. And then again, I think it overshoots. I think it's going to start trading as a precious metal, not an industrial metal. And a lot of the money that's going to come into the ETFs and into the sector, it doesn't take much for the silver price to move in a substantial way. So a lot of catching up there, which again, it just makes my capitalist heart giddy. I like when things are cheap. That's another great line from Mr. Rick Rule, right? He says, when things go on sale, I like to buy. And I think silver is on sale. And I think the silver equities are really, really, really on sale. So again, this is timely because one of the picks today, I think, is going to be a phenomenal winner for us.
You mentioned capital rotation there out of the tech sector, and you've quoted Rick a couple of times. I'll quote Doug Casey, who is a subscriber of ours, and he says that when capital starts moving into this smaller end of the spectrum, it's like trying to siphon the Hoover Dam through a garden hose, right? It just doesn't work. So I think that's what we're beginning to see now. And I mentioned earlier that, the stage is set for the entire complex to go up to 300%. And the best in breed, best in class names are going to go up 7 to 10 to 15x,
Easily.
Right? So with that, what is the importance of being early to the precious metals sector, the junior precious metals sector? And I guess put another way, what do you risk missing out on if you aren't early?
Yeah, being early is again, Mr. Rule, he's got all the great lines, right? Being early means you're wrong for a little bit, right? And I'll give you a great example. I had some close friends, and they had a tech portfolio about a year ago, and I saw, money was going to rotate out of tech. I didn't know exactly when, but I explained to them that I would be happy to try to position them in something that I thought had 10-fold, 15-fold, 100-fold potential, but that it might take a bit. So, they liquidated some Apple stock, a substantial amount of Apple stock, and then Apple proceeded to run 30%. And the stuff I put them in proceeded to go backwards 30, 40, 50%, right? It's so important to know what you own. And what I explained to them was, I don't care what the price is right now. This is the setup year. This is the year where you're going to establish robust positions in these 2 or 3 companies, positions that nobody wants right now. And you're going to be early, and you're going to be down 30 or 40%. And then when it turns, it's going to turn. And so, Hannon Metals, we touched on that earlier. Hannon Metals was one of those companies where they started buying that right around the 25-cent level. Here it sits, less than a year later. And now, Apple's pulled back 20, 30%. It's likely going to pull back some more, especially if these tariffs continue. And Hannon now has gone from a 25-cent stock to a $1.40 stock. And so that's got the potential to be, from a $1.50 stock to a $3 stock to a $5 to a $10 stock within the next 12 months. So I say all that to say that wouldn't have been possible if we didn't position a year ago at the 25-cent level, when all that was happening was the surface work, the surface exploration work, the geochemistry stuff, the geophysics stuff, us in the jungle, right? The stuff that is tedious, the stuff that is so critical in de-risking targets. And we're going to see, I think, the fruits of that labor materialize in pretty short order here with Hannon. So yes, being early is being wrong sometimes. I would rather be early, because if not, you risk the potential. I'll be down 40, 50%, zero problems. I won't flinch. I want that potential early position, because I don't want to miss out on 500% gains before the fun starts and everybody catches on. That's where we're at in this cycle right now, Nick. We're early innings, if you want to use baseball parlance, right?
I was just going to say, it's a volatile sector. And one of the other truisms or aphorisms is that, some of the biggest gains come after you've been down 50% on a position, right? And have had the wherewithal or the chutzpah to hold that position through the volatility that the sector is known for. And not only is it known for volatility, it's known for a couple of other things. It's known for creating fortunes when these stocks get going. And it's also known for being an absolutely terrible space to invest, right? Most of these companies aren't investments, as we say, they're speculations. And that's because they're poorly run or poorly structured, or they're not looking to mine anything except shareholder capital. In fact, the entire TSXV combined, again, pointing back to Rick, who calls it junior amalgamated, that group of companies altogether would lose something like $2 to $5 billion a year. So in an environment like that, where there are, pitfalls and things you can step into, how do you go about cutting the risk so you can maximize the upside for yourself and subscribers?
I got to go back to the network again, right? I mean, it really is important to know the right geologists, to know the right people in Australia. If I'm being pitched an Australian land package, I'll give you a prime example. I had a company that was pitching us last month that wanted us to help tell their story and wanted us to be shareholders. And I looked at the project and I reached out to a close contact of mine out of Melbourne, and I said, "Hey, are you familiar with this project?" So, oh yeah, we tried staking that 6 months ago, but then when we got into the due diligence process, we figured out why nobody had staked it before. You probably want to stay away from that one.
Fatal falls.
Right? Easy work. I was talking to someone that had been on site, that had talked to the locals, that had talked to local government, that had done all of the legwork for me. And all it took was a 15-minute call for me to not step into that potential mine trap, right? And so those are the types of that's the type of due diligence, and those are the types of contexts that luckily we've been able to develop over the years. To your point about it being a tough sector if you don't know what you're doing and you don't have the right context. One of the first jokes told to me, and it wasn't funny because I didn't have a lot of money at the time. I was trying to make money, but the gentleman looks at me and he says, "Hey, I got a joke for you." I said, "Okay, I love jokes." And he says, "How do you make a small fortune in the mining business?" I said, "How?" He said, "You start with a big one." I didn't think it was funny. I didn't have that much money, and I sure in the heck didn't have money to lose, right? And so, again, just having that background and having those years of trading during collapses and bear markets, and now finally being able to be at a point, not just with gold, but with copper, with other commodities, where it's like the perfect storm for years of profit making. I couldn't be more excited, Nick.
Yeah. And I'll give you 3 keys to success just because we promised them for this free webinar. So I'll rattle them off here. The first is you got to right size your speculation, know how much is right for you and your portfolio, and know that they're speculations and not investments. And the second thing we say a lot, and other folks say as well, is you got to do the work, right? You can't have a portfolio of 30, 40, 50 companies and expect to know what's going on with all of them. You've either got to have a portfolio of 10 companies that you spend a couple hours on a month doing due diligence and staying up on the news, or you've got to have some sort of research behind you, someone like a Gerardo Del Real at Junior Resource Monthly that does have that network. And the third you already said is go big or go home, right? Avoid small land packages, avoid small mines. They have the same problems and pitfalls as large mines. So I know when you do due diligence, and the things I've heard you say multiple times are, you're looking for that district scale potential. You're looking for those large land package that contain or can contain potentially multiple deposits, right? That's certainly the case with Hannon and others we've discussed at length over the past couple of months. And with that, let's get into it. We've got 3 companies that we're going to cover here. I'm going to share my screen again, and we're going to go over them. So here we go. Company number 1, Gerardo, a past producer with that previously mined 300 to 500 gram per ton silver. Currently has a $25 million market cap in an area, and with a land package that has recently fetched billion-dollar acquisitions by majors. And as you said, drills are going to be turning very, very soon. So espouse on this company for me.
There's my analog for this company is a company that is 20 to 30 kilometers from this past producing silver mining district with some important gold and copper and zinc and lead credits, right? But it's primarily a pure silver exploration play. It's a past producing district with phenomenally high grades over many, many, many kilometers. And this was mined back in the 40s and the 50s. And what happened, prices collapsed and they quit mining the silver. And then eventually the land package was fractured. And so what used to be one big silver mining district became 7 or 8 different parcels of land with 7 or 8 different owners. And so fast forward some 60 years, 70 years, the gentleman that runs the company, who was brilliant in recognizing this, decided that he was going to approach all of the different landowners and go ahead and try to consolidate it. And it seemed crazy at the time because he approached us a couple of years ago and he said, "Hey, Gerardo, I got this idea." I said, "Well, hey, it's a heck of an idea if you could pull it off. Talk to me when you pull it off." Fast forward a year later, he comes back and he says, "Gerardo, I was able to get every piece of the 7 or 8 parcels of land, and I've put the entire district together." And so when I heard that, I immediately dug into the due diligence process. I looked at the share structure. He owns 30, 40% of the company. I looked at the amount of shares outstanding, who owned them, where they were placed. It's one of the cleanest share structures that I've seen in quite some time. And so at that point, I absolutely said, I want to be behind this. And so the analog that's 20, 30 kilometers away was recently purchased for $970 million US for 70% of its land package. Now, obviously, they had gone through what this company is going through now, which is proving up how much silver is there via the drill bit. That starts now. And I could not be more excited with a $25 million market cap. You can do the math by dividing $1 billion by $25 million. And also, I don't believe that the gentleman that put this land package together is done dealing because of the network, again, that he has in that part of the world. So yeah, couldn't be more excited for what I think is going to be one of the best silver stories of the next couple of years.
And if you can't do the math, it's 40x. Company number 2, High Grade Discovery, that has already 60 individual intersections greater than, and this is not a typo, 100 grams per ton of gold equivalent. And back to share structure, nearly 60% held by insiders, high net worth investors and institutions. And oh, by the way, has an antimony kicker, just like Perpetua Resources, which we've already discussed.
Listen, this pick is, I'm excited for all 3 picks for different reasons. I just presented to you the silver opportunity and the upside there, right? This one, in this case, is a more mature discovery. It is one of the most exciting gold discoveries with a great antimony kicker. Antimony contributing some 20% to potential economics. But they're already on to a multi-million ounce gold deposit in a top-notch jurisdiction with a top-notch team. They'll have some 8 drill rigs turning. Not a coincidence that some of the biggest names, some of the best investors in our business own substantial amounts of this company and will until the company is taken out. By taken out, I mean bought. It will go for much, much higher prices. And so this is a more mature play for those of you that look at this and say, hey, Gerardo, I love that you get excited about the high risk, high reward stuff, but I need something that's more liquid. I need something that's more mature. I kind of rather would come in and allocate capital to a company that already is sitting on a couple of million ounces of gold and let it continue to prove that up and grow and increase in value as the price of gold continues higher, like we all predict it will. This is that perfect balance and that perfect play. So yeah, no, look, I love the management team. I love who owns the stock. Simple guy with a simple premise. It makes me feel a little bit more intelligent and informed when some of the best investors in the world continue to buy it at current prices. And I sleep well at night with this one in the portfolio. So that is that is your high grade gold with antimony pick number 2.
Echoes of Kirkland Lake, to be sure. And you can see how fast it's growing there with 2023 on the left, and then with the addition of 2024, 2025 holes on the right, and how many of them are, in fact, above 100 grams per ton gold equivalent. And as you said, 8 rigs turning. So expect more purple blobs on that chart.
World-class discovery. Absolutely.
And the third one and final one for today, a gold lithium tin, which you don't typically see together, super high grade on both. So 18 plus grams per ton gold in channels, super high grade, and then potentially the highest grade lithium deposit in the US. And they'll be drilling this quarter with a tiny $15 million market cap. What say you about this one?
Take my money. That's exactly what I said when it was first presented to me. And so, look, for those of you that have been with me for a couple of years now, we've done great. And now we're in the midst of a pullback with Patriot, which will work itself out, but we've done great with lithium. Lithium is bottoming. Lithium will bottom. Lithium will turn. And what we're going to see here over the next several years is a nationalization of critical metals. We're starting to see it already in the uranium space. You're going to see it in lithium. You're going to see it with several other commodities where nations are realizing that you can't just be beholden to China. We got our rare earth supply cut off here recently, right? And everybody did. And we're hopefully starting to understand, and to this administration's credit, I believe they get this part of it. We're starting to move very aggressively to expedite permitting for critical metals projects and commodity projects in the US. That is hugely beneficial for this company because the high grade gold, you mentioned 18 grams per ton in channels. That was over some 20 meters. It wasn't a meter of 18 grams per ton gold. It was some 15, 20 meters over a 3.5 kilometer strike length. And so when I talk about potential scale, this land package actually is smallish. It's smaller than I typically like, but the mineralization, the 3.5 kilometers of potentially high grade gold, it can absolutely yield a high grade multi-million ounce gold deposit. Oh, by the way, it's on private land. And yes, it is here in the US. And oh, by the way, when we assay the gold, we get to also simultaneously assay for lithium, and the lithium grades, the samples that we've received. I was told by a geologist that did the site visit here recently, and people that are very informed and that I happen to value their opinion. I hold them in high regard, that they hadn't seen the type of exposure at surface with these types of grades anywhere, with the exception of Greenbushes, which is, of course, one of the largest deposits of lithium in the world with that grade, right? So, look, this has got a $15-20 million market cap. If we get half of Greenbushes and just 1 million or 2 million ounces of high grade gold, this will be bought in the next 2 years. It will be bought for a lot more than 15 or 20 million. And this is that kind of play that, again, can offer, from $15 million to $1 billion if Mother Nature cooperates and everybody does the right thing. So, back to due diligence, we wanted to make sure that the land package was what we wanted it to be, and I have it on good authority that they're looking to continue to add to that. And I'll take management at face value. And then it was really important for us to be able to have someone there helping dot the I's and cross the T's, somebody that we've done that with before. This one checks all of the boxes. So I couldn't be more excited. You and I, Nick, hopefully we'll be down there here in the next couple of weeks to get there on the ground and see it for ourselves. But I am an excited shareholder of this company as well.
Yeah, worth noting also that it's on private land, which should definitely expedite the timeline. You don't have to deal with the three-letter agencies, the BLM, the Forest Service, et cetera, which can cause hiccups and delays in moving a mining project forward. And absolutely, we're going to have boots on the ground there sometime soon. So for the details now, here's the report. This is where the rubber meets the road. 3 junior gold and silver stocks to own now when you become a member of Junior Resource Monthly, which is Gerardo's monthly publication where he recommends these companies, does site visits and tells you more about them, encapsulates all those details in monthly issues, and puts the details of his recommendations into reports like this. So those 3 companies that we just outlined in this new report, 3 junior gold and silver stocks to own now by becoming a member of Junior Resource Monthly. And then you'll get access to the other reports that are already on the site, Elephants in Peru, which we've been selling, and the greatest gold trade ever. There's more to talk. There's more to talk about here because as part of this special webinar, we're offering access to our premium podcast, which we've been selling for a couple of months now, and now has several hundred paying members, and that allows you to get access to Gerardo once a week, direct live.
And my exotic dance stories.
That's exactly right. So, with Junior Resource Monthly, you don't get that access because it's a monthly issue. So as part of this offer today, offering 30 free days of investing in Bizarro World Live, which itself costs $99 a year, free for 30 days, no catches, no gimmicks. We won't auto bill you for it. Your free subscription will just expire over 30 days. And if you like it, you're welcome to resubscribe. But we wanted to give you a taste of investing in Bizarro World Live with this special offer. And then everything you get with Junior Resource Monthly, 12 issues, once a month, the first week of the month, every month of the year. Flash alerts when recommendations are issued or when markets determine they are needed. Certainly, with the volatility we've been experiencing with the tariffs and everything else, flash alerts are more warranted in this climate. And then you get access to the Junior Resource Monthly Model Portfolio. Every single position, there's certainly more than the 3 we outlined today. Along with at what prices you should be adding those stocks to your portfolio. You get Gerardo's insights, of course, in those issues, how he vets companies, his due diligence, et cetera, in those reports. I mentioned the investing in Bizarro World Live. And then a couple of things we're doing as part of this special webinar offer. One is that Gerardo's guaranteeing that one of these stocks will double in the next year. Or you'll get.
I wanted to guarantee all 3, folks. They didn't let me, but I feel that confident about them. By the way,
or you'll get a free year of Junior Resource Monthly. So you just heard Gerardo; he's confident that they're all 3 are going to double. And then, as always, as we do at Digest Publishing, we're about honesty and integrity, and we don't want to take your money if you don't want to give it to us. So, 60-day risk-free satisfaction guarantee. Check out 2 of the next issues for 2 months. And if you don't like what you see, just hit up our director of member services, Jimmy Mingle, and ask him for your money back. So I think that's it. Thanks, Gerardo.
Thank you, everybody. Appreciate the kind words. Appreciate you taking the time today. Have a great week. Make it count, everybody. Hope you join us. Let's get it. I'm excited, folks.
See ya.